Now we are starting with the first segment, segment 1, introduction to GST. In this segment, there is only one amendment, that is about GST compensation cess extended period. As we all know that GST compensation cess is levied in order to compensate the states on account of loss due to implementation of GST. So this GST compensation cess is levied on both intrastate transactions as well as interstate transactions. You all know that. So now what is the validity of this compensation cess? I mean, for how many years this compensation cess can be levied by the government? This compensation cess can be levied for a period of 5 years from the date of implementation of GST. So what is the date of implementation of GST? 1st July 2017. Starting from 1st July 2017, 5 years, so therefore it's gonna expire by June 2022, which is already over as on today. So what about the GST compensation cess? So it has been extended for a further period because GST Council is having power to extend the applicability of GST compensation cess for a further period. Accordingly, so now GST compensation cess levy has been extended for a further period up to 31st March 2026. So that is the end date of GST compensation cess as on today. So this is one amendment in introduction to GST. Now we are moving on to segment 2, taxable event under GST. So in this segment, we have few amendments. So mainly there is one circular about taxability of perquisites. So we have certain background information related to this. So let's try to understand that one by one. Number one, we know that services provided by employee to employer in the course of employment is excluded from supply as per 7 subsection 2 read with schedule 3. So now whenever employee receives salary from the employer, it is excluded from supply and not chargeable to GST. What if employer gives some goods or services to the employee, so as perquisites or gifts, what is its taxability? So supply by employer to employee is divided into two, that is perquisites and gifts. What is perquisites? Perquisites means those which are covered under the salary offer document, whereas gifts are something which out of gracious, so the employer will be giving it to the employee, which will not be mentioned in the offer document. That's a basic difference. Perquisites will be covered under offer document, which means it's part of salary, so therefore that is excluded from supply because we know that services provided by employee to employer in the course of employment is excluded from supply. Whereas the gifts given by employer to employee will be coming under supply, that too if the value of gift exceeds 50,000 rupees in a financial year. Relating to that, one circular has been given by CBIC. So what is that circular they are telling? The issue dealt in that circular is whether perquisites given by employer to employee as per contractual agreement entered into between employer and employee are liable to GST or not. For that, so the clarification is provided that it is not a supply if it is covered under salary offer document. So which is already a well settled clarification, but officially CBIC has not given this clarification. So now they have given. So now what you need to remember is that perquisites which are covered under salary offer document given by employer to employee are not treated as supply and therefore it will not be chargeable to GST. Invoice and time of supply. In this, there are majorly two amendments. The first amendment is related to e-invoice applicability. So when a person is required to give e-invoice, so if their aggregate turnover during any previous financial year from 2017-18 to 2021-22, 2017-18 to 2021-22, if it does not exceed 20 lakhs, e-invoice is not required during the financial year 22-23. That was the provision before amendment. Now, with effect from 1st October 2022, they have modified that limit to 10 crores. So now what we need to understand, now you are in the month of October. So 1st October onwards, you are in the month of October 2022 onwards. Now see, what is your aggregate turnover during the previous years? From which year to which year? 2017-18 to 2021-22. In any financial year, in these financial years, in any financial year, if aggregate turnover exceeds 10 crores, then from 1st October onwards, on your outward supplies, what outward supplies? B2B outward supplies, because e-invoice is not applicable for B2C supplies. E-invoice is applicable only for B2B supplies. So for those B2B supplies, what is B2B supplies? The recipient is registered, is known as B2B supplies. So in that case, e-invoice will be applicable. So what is the time limit? What is the monetary limit that we need to know? 10 crores. If aggregate turnover during any previous financial year from 2017-18 to 2021-22 exceeds 10 crores, then from 1st October 2022 onwards, e-invoice is required for outward supplies. In this regard, let's have some more information also. That is, so what is e-invoice? So far what we have seen is when e-invoice is applicable. So what is e-invoice? It is simple. Already we have an invoice which is prepared in our billing software. So that invoice we upload into invoice registration portal, a government portal, and obtain 3 things is known as e-invoice. What are those 3 things? Number 1, invoice reference number. Number 2, QR code. Number 3, digital signature. Now that will be called as e-invoice. Then for B2B supplies, there is a concept called as dynamic QR code. So this dynamic QR code is not that we have to get it from the portal. The dynamic QR code is whenever we are collecting the money from our customers in B2C, so we have to collect the money by scanning this dynamic QR code. So to whom it is applicable? This will be applicable to a registered person whose aggregate turnover during any previous year from 17-18 to 2021-22 exceeds 500 crores. There is no amendment in that place. Okay. So therefore, from this we need to understand. So what is that? First, aggregate turnover we need to see. That aggregate turnover in any financial year from 2017-18 to 2021-22. So first, it does not exceed 10 crores. When it does not exceed 10 crores, so we don't have to give e-invoice. Even dynamic QR code is not applicable for B2C supplies. For B2B supplies, e-invoice not applicable. For B2C supplies, dynamic QR code not applicable. Whereas, when the aggregate turnover exceeds 10 crores but does not exceed 500 crores. Now, in the second limit, exceeds 10 but does not exceed 500 crores in any financial year, then for B2B supplies, e-invoice is applicable. For B2C supplies, dynamic QR code is not applicable. Whereas, the third slab is whenever aggregate turnover during any previous financial year exceeds 500 crores, anyhow for B2B supplies, e-invoice is applicable. For B2C supplies, dynamic QR code concept is also applicable. The next amendment is that, as we already discussed, the similar time limits, so the time limit for issuance of credit note has amended. So before amendment, the time limit for issuance of credit note was 30th September of the succeeding financial year or date of filing annual return, whichever is earlier. So now the 30th September has been changed to 30th November, which means the credit note should have been issued by 30th November and the details of that credit note issued by 30th November should be updated by that November of the succeeding financial year return, so that the credit note will be valid. So what if the credit note is issued after this date? Can it be issued? Yes, it can be issued, but remember, if the credit note is issued after this date, because of that, this cannot be reported in GSTR 1. Consequently, the reduction in liability is not possible. So, when we issue credit note, whenever we prepared an invoice and the value in that invoice or the tax in that invoice has come down, or in case of sales returns, or in case of deficiency in the quality. So, we in the sense supplier. Supplier issued to the recipient a credit note because of which already whatever GST that has been paid will come down. So, that is the benefit of credit note issued by supplier to recipient. So, what is the time limit here now? So, 30th November of the succeeding financial year, and credit note is linked to the invoices. So, any invoice that is prepared or issued in a financial year, say 2022-23, invoice is issued during 2022-23. For these invoices which are issued during 2022-23, the credit note can be issued on or before 30th November of the succeeding financial year, that is 30th November 2023. On or before the date, the credit note has to be issued, or date of filing annual return, whichever is earlier. So, surprisingly, I know 90% of the taxpayers will not be filing their annual return before this 30th November. So, usually they file the annual return by 31st December, means maybe by 20th December or 25th December, this times only they will be filing. But the 10% category of taxpayers, like some corporates who comply with the provisions of GST, where they have a separate GST department, so they don't have this problem. So, they will be filing even before 30th November also. Some people will try to file it by 30th September. So, because they want to close everything by 30th September, all these income tax, annual returns, audits, all those things. So, mainly due to that reason, they can file the annual return by 30th September also. In that case, whichever is earlier is what? 30th September. So, already we have learned some similar time limits. So, this is one such point. Now, we are going to see one illustration on credit note. So, this illustration is given in my solved workbook. So, if you already have the solved workbook 10th edition, you can see from that. Otherwise, you can see in the PDF which I have provided. So, have a look into this question. So, this question was from solved workbook, page number 56, 10th edition, question number 10. EA Limited, a GST registered supplier, manufacturer, has supplied goods under the cover of a tax invoice. So, what is the value in the tax invoice? 20,000 plus 5% GST. This tax invoice is dated 30th August 2022 and has been reported in the return file for the month of August 2022. So, therefore, this invoice pertains to which financial year? This invoice pertains to financial year 2022-23. This invoice pertains to financial year 2022-23. So, for any invoice which is given in this 2022-23, what is the time limit to issue a credit note? So, what is the time limit to issue a credit note? A, that is 30th November of the succeeding financial year. What is 30th November of succeeding financial year? Means 30/11/2023, or date of filing annual return, whichever is earlier. So, if you see the question, they have given that annual return for the financial year 2022-23 is filed on due date. So, what is the due date? 31st December 2023 is the due date. So, therefore, whichever is earlier will be taken as the time limit as per the updated provisions. So, therefore, we need to take 30th November 2023 as the time limit by which it should have been issued. What should have been issued? The credit note should have been issued. So, now if you see here, so what is the GST treatment in each of the following situations? So, also discuss the corresponding documentation that is required in this case. First case, if you see, goods are returned by the recipient in December 2022, so same financial year, and supplier returning the full amount of 21,000 to the recipient. So is it within the time? Yes. So we have a time limit. By 30th November, we need to give the credit note. So we can give the credit note in the month of December 2022 itself, as the full amount collected is returned. What is the full amount collected? 21,000. As the full amount collected is returned, so therefore credit note can be issued under section 34, and because of issuance of that credit note, we can report that credit note in GSTR 1, because of which there will be reduction in liability by 1,000 rupees for the month of December 2022. That is the answer for this. Whereas B, goods are returned by the recipient in December 2022 and supplier returning only 20,000 rupees, price excluding GST, to the recipient. Now in this case, can the credit note be issued? Yes, but not under section 34. It's a normal credit note for the accounting purpose, but not a credit note under section 34. Why not a credit note under section 34? Because when you can give a credit note under section 34, only when you pass on the entire incidents to the recipient. So then how you can give a credit note? Because the liability is passed on to the recipient. The burden is now on the recipient. So definitely you cannot give the credit note in that case. Suppose if you are giving entire 21,000, means the incidence is on you, so that you will be able to get the benefit. So in this case, as the incidence is passed on to the recipient and completely the burden is now on the recipient, supplier cannot issue a credit note under section 34, because of it there is no reduction in liability. Even though the date is within the time limit, and even though a credit note can be issued, but it is not under 34, means it cannot be reported in GSTR 1 of December 2022, and consequently there is no reduction in liability that is possible. Next situation, if you see, situation C, goods are returned by the recipient in January 2023 and supplier returning the full amount of 21,000 to the recipient. Is Jan 2023 within 30th November 2023? Yes. So which means, yes, credit note can be issued as it is within the time limit. And can that credit note be under section 34? Yes, because the full amount is refunded. So therefore, yes, credit note can be given, and that credit note will be declared in GSTR 1 of Jan 2023, because of which the liability will come down. Then D, goods are returned by the recipient in Jan 2024 and supplier returning the full amount of 21,000 to the recipient. Now in this case, what will happen? So in this case, as goods are returned by the recipient beyond 30th November 2023, because what is the time limit by which the credit note can be issued? The time limit by which the credit note can be issued is 30th November 2023, whichever is earlier, 30th November 2023. But here, the return is happening in Jan 2024, which is beyond 30 November 2023. So a credit note can be issued, but not under section 34. A normal credit note can be issued, which means that will there be any reduction in the liability? No, there is no reduction in the liability, even though supplier has returned full amount. But this case is a loss to the supplier because he returned full amount, but whatever tax he paid, that will not come down. So therefore, this 1,000 rupees will be a loss to the supplier. The next amendment that we are going to see now is related to a declaration to be given in the tax invoice. So Rule 46 has been amended to state that every person who is not required to give e-invoice. Why he is not required to give e-invoice? Number one, maybe his aggregate turnover during any previous financial year from 17-18 to 2021-22 has not exceeded 10 crores, or they are covered under certain exclusion category. What are those exclusion category? Biggest. B for banking company, I for insurance company, G for government or local authority, next G is goods transport agency, E for exhibition of film in a multiplex theatre, and S for SEZ unit, and T for transportation of passengers through any mode. So these people are not required to give e-invoice even if their aggregate turnover during the previous year exceeds 10 crores. Okay. So now they are not required to give e-invoice. Now when they are not required to give e-invoice, so they have to give a declaration in the invoice that as our aggregate turnover does not exceed the specified limit, or as per Rule 48, we are not supposed to give the e-invoice. So therefore, a normal invoice has been issued. Like that, a declaration has to be mentioned. Why they have made this amendment? What is the reason behind this amendment? There is one important point which you should be knowing. That is, if I am a supplier, I am supposed to give e-invoice. I have not given e-invoice, I gave a normal invoice to you. Now, on this invoice, you cannot avail ITC. Even though I report this invoice in GSTR 1 and that comes in GSTR 2B of the recipient. So, you get this invoice details in the GSTR 2B of yours. But even then, you cannot take ITC because there is one clause that has been given which states that if a supplier is not issuing e-invoice where he is supposed to give e-invoice, on such invoice issued by the supplier, recipient cannot avail ITC. So, that's the reason why they brought in this amendment that every supplier who is required to give e-invoice will definitely give. Who is not required to give e-invoice should mention this declaration that they are not required to give e-invoice in the invoice, normal invoice, they need to give the declaration. Now we are moving on to amendments in input tax credit. In segment number 4, place of supply, and in segment number 5, value of supply, there are no amendments. So we have amendments in input tax credit, few amendments we have. So let's try to understand with the first amendment. That is, in the section 16, conditions for availment of ITC, so they have added one clause, new clause in section 16 subsection 2. In section 16 subsection 2, clause BA has been added. Now let's try to understand this section 16, what are the conditions. Section 16 subsection 1 gives two basic conditions. Only a registered person can avail ITC, and condition number 2, so that inward supplies on which they avail ITC should be used in the course or furtherance of business or intended to be used in the course or furtherance of business. So this is two basic conditions given in 16 subsection 1. Whereas 16 subsection 2 gives some additional conditions. In that additional conditions, so we have number 1, a person who intends to avail ITC should be in possession of the tax paid document. And the next one is that, so he should have actually received the goods or services, then only he can take ITC. And yet another condition is that the supplier should have reported the details of outward supplies in GSTR 1 and made it available to the recipient in GSTR 2B. This was an amendment for previous attempt November 22 exam. So this is also one condition. What is that? Supplier should have reported the details of outward supplies in GSTR 1 and should be made available to the recipient in GSTR 2B. Third condition. Now fourth condition, so which is the latest condition that has been added, is that so that ITC which is reflected in GSTR 2B should not be restricted, because in GSTR 2B we have two things, that is ITC available and ITC not available. Suppose if the supplier is giving an invoice and that invoice is reported in GSTR 1, but in GSTR 2B, if it is shown under ITC not available, which means it is restricted. So therefore, the recipient cannot enjoy the ITC with respect to that. When this kind of situation shall arise? For example, you are a chartered accountant. You go to a hotel for outstation audit. When you go to a hotel for outstation audit, you stay in that hotel. So now that hotel will raise CGST, SGST invoice on you. Why? Because in case of services in relation to immovable property, the place of supply will be location of immovable property. So that hotel will raise CGST, SGST invoice of the state where that hotel is situated, but you are from a different state. Now you cannot take that ITC even though that hotel gets your GSTIN and prepares a B2B invoice and enters that in GSTR 1, but in your GSTR 2B, it will be coming under ITC not available. So now you cannot argue that, so as the details are mentioned by the supplier in GSTR 1, I should be getting the credit. That's the reason why they added this clause. That is section 16 subsection 2 clause BA. This is one example. Not necessary that only in this case, the ITC is not available to the recipient. There could be other cases. Maybe there could be some blocked credits which don't have any exceptions. Example, food and beverages, membership of a club, etc. So these cases also we may give GSTIN. The supplier may report it in GSTR 1, but it will be coming under GSTR 2B under restricted. So which means we cannot enjoy that ITC. That is this condition. Then the two more conditions which are normal, that is the tax should have been paid on that inward supply. And last condition, the ITC on which you wanted to avail, you should have filed the returns and you should have mentioned which return GSTR 3B. So now previously we had 4 conditions. For November 22 exam it became 5 conditions. Now we have 6 additional conditions. So the 6 additional conditions are: the person who want to avail ITC should be in possession of the tax paid document. Number 2, goods or services should have been actually received. Number 3, supplier should declare the details of outward supply in GSTR 1 and made available to the recipient. Number 4, supplier should have mentioned the details in GSTR 1 and made available to the recipient, and that ITC should not be restricted in GSTR 2B. And the next condition is that the tax should have been paid on that inward supply, and the last condition is that ITC can be availed only by filing returns, that is GSTR 3B. So return should have been filed. Now we are moving on to the next amendment in input tax credit, section 41, which deals with availment of input tax credit, has been completely substituted. So previously we had some information about availment of ITC, provisionally we can take ITC, all these informations we had. But now, as you are aware that only the matched ITC can be availed. What is matched ITC? That ITC which is reflected in GSTR 2B is known as matched ITC. So in order to incorporate this, they have amended section 41. So as per this section 41, which says that every registered person, subject to certain conditions and restrictions, as may be prescribed. So we have certain conditions and restrictions as may be prescribed, be entitled to avail the input tax credit, self-assess in his return, and such amount should be credited to his electronic credit ledger. So here they are focusing on the self-assessed ITC. Now here comes the important question that I am taking the ITC whatever is there in GSTR 2B. Can I take any extra ITC? Yes. You can definitely take extra ITC. What is that extra ITC that you can take? Whatever GST that is paid under RCM. Whenever you pay GST under RCM and the supplier is unregistered person, supplier will not be able to file GSTR 1, which means that it will never come in GSTR 2B. So still you will be able to take ITC with respect to that, correct? So that ITC you can take even though it is not coming in GSTR 2B. So that's why they use the word self-assessed. Moreover, whatever ITC that is there in GSTR 2B, you don't have to blindly take that ITC. Why you don't have to blindly take that ITC? Because there are some ineligible ITC, blocked credits. So department may not know that it is a blocked credit for you. So you know that it is a blocked credit. Say purchased goods used for personal consumption. So you should take out. Even though it comes in 3B, you should not take that ITC. Eliminate. Second, inward supplies which you are using for non-business purpose. Eliminate. Inward supplies which are used for exempted outward supplies. Eliminate. So blocked credit. Number 2, inward supplies used for non-business purpose. Number 3, inward supplies used for exempted outward supplies. These 3 will be there in GSTR 2B. These 3 will be there in GSTR 2B. But as it is there in GSTR 2B, you cannot say that it is my matched credit and I can take that ITC. No, never. So what we need to do? As per section 41, we need to do the self-assessment there. What is that self-assessment? See what is there in the 2B ITC available. Take that. Minus. Second, what you need to do? Take out blocked ITC. Minus ITC with respect to inward supply used for non-business purpose. Take out. Then third minus. ITC with respect to inward supply used for exempted outward supply. Take out. Next, add one point. What is it we need to add? GST paid under RCM. Now this is the self-assessed ITC that we can take in GSTR 3B. So this is now officially given in section 41. Not that it was not there before. It was there before, but officially there was no proper section. Now while Finance Act 2022, they have given this in section 41. Then the next one is about the credit of whatever you are availing in as per subsection 1, that is self-assessed tax. Okay, so suppose the tax has not been paid by the supplier, which means, so see this complex scenario. Supplier filed GSTR 1, but supplier not filed GSTR 3B. Supplier filed GSTR 1, but supplier not filed GSTR 3B. When supplier filed GSTR 1 but not filed GSTR 3B, what will happen? So, whenever he files GSTR 1, it will be coming in your GSTR 2B. You are the recipient. Say I am the supplier. I file GSTR 1. When I file GSTR 1, so it will come in your 2B. You took the ITC. Okay. Now, supplier has not filed GSTR 3B. So, which means when I file GSTR 1, I don't have to pay the tax. When I need to file 3B, I have to pay the tax. So, I don't want to pay the tax. So, I have not filed 3B. First month. Of course, second month I cannot file GSTR 1. That is there. That's always there. Without filing 3B of the previous month, I cannot file the GSTR 1 of the subsequent month. That's okay. But for the first month, we will try to understand. So, only 1 month. First month and transaction. 1 filed. GSTR 1 filed. GSTR 3B not filed. Now, you took the ITC based on 2B. You took the ITC based on 2B. Now, the question comes. Sir, what if my supplier has not filed GSTR 3B? Then what about the ITC that I have taken? That's where subsection 2 come into the picture. Subsection 2 says, darling, whatever ITC you have taken in 2B, you please reverse it. Why should I reverse it? Because your supplier has not paid tax. As your supplier has not paid tax, you kindly reverse that ITC along with the applicable interest. So, here there is one amendment related to interest. Anyhow, we will come across this interest amendment in a different chapter, different segment, payment process, but I am just giving you a clarity about that amendment. Now, we need to compute interest only on the ITC utilized, not availed. Whatever ITC availed and reversed, we don't have to pay interest. ITC availed and we have utilized. So, whenever you utilize it, from that date onwards, you need to pay the interest. Now, there is an amendment, a new rule has been added like rule 88B. So, when we come into that, there I will explain in detail, but try to understand now that you took the ITC as per 2B, but your supplier has not filed 3B, so which means you need to reverse the ITC. Okay? And where the said supplier makes the payment of tax in respect of the aforesaid supplier, say he filed GSTR 3B late, next month or thereafter he filed GSTR 3B. Can you re-avail the ITC? Yes, you can re-avail the ITC, no problem. You can re-avail the ITC reversed already because your supplier has not filed GSTR 3B. Now, here comes the important discussion. How recipient will know whether supplier has filed 3B or not? That data is made available to the recipient in GSTR 2A. In GSTR 2A currently, every invoice you click on that invoice, even in 2B also, click on that invoice, you will know whether your supplier has filed GSTR 3B or not. So, GSTR 1 filing status, GSTR 3B filing status will be there, GSTR 3B filing status will be no. So, which means that you cannot avail ITC with respect to that. Now, we are going to discuss one question on matching of ITC. So, this question is from solved workbook. So, page number 199, it was RTP May 21 question and I have modified this so to suit the current matching of credit concept. So, let's go to the question now. Sunshine Private Limited manufactures taxable goods. The company is registered under GST in the state of West Bengal. The company has provided the following information in relation to inward supplies received by it in the month of October. So, right now we have the details for the month of October. And what are those details? Raw material X, rent of the factory building, raw material Y, car purchase, consumables, machinery, raw material Z, technical consultancy for improvement in the manufacturing process, raw material W imported from China. So, this is the data that we have. And if you see here, so what has happened is that balance in GSTR 2B as on 28th October. So, here this pertains to October. So, October month data should be reflected in GSTR 2B that is generated after October. So, therefore, the suppliers will be filing their GSTR1, and whenever the suppliers file their GSTR1, so based on that, the 2B gets updated. So what is the cutoff date? The cutoff date is actually 11th or 13th as the case may be. So usually it will be taken as 13th because the suppliers may be under QRMP. So we are making purchases from certain suppliers, and those suppliers may be covered under QRMP, that is quarterly return filing. So in that case, they will be updating the details of outward supplies in IFF, invoice furnishing facility. That invoice furnishing facility needs to be filed by 13th of the month following every month. So we need to take the 13th as the cutoff date. So as on that date, whatever GSTR1 and IFF that has been filed, so that will be reflected in GSTR2B. If you see in this, so balance in 2B as on 28th October, that is irrelevant. Balance in 2B on 11th November, yes, that is only relevant, not on 20th November. Why? Because, so 20th November, whenever, so there is a GSTR2B, so that GSTR2B, so will be updated as on the due date of filing GSTR1 or IFF by the respective supplier. Actually, this question is based on 2A. So there is no chance that 2B gets updated automatically, but 2A gets updated. Actually, this question is based on 2A. I have just modified it for 2B. So now out of this, what is the relevant data that we need to take? So we need to take only this 6 lakhs. Why? Because, so as on that 11th, and now it is 13th, as on that 11th or 13th, whatever is the balance that is there in 2B, that is only called as matched ITC. So this 6 lakhs is related to invoices serial number 1, serial number 2, serial number 3 and serial number 4. Now, what about other invoices? That invoices we cannot take ITC. Now we will analyze 1, 2, 3, 4, whether we have any blocked credits in that 1, 2, 3, 4. So raw material X, so it is matched ITC and it is also not block credit, so we can take this as ITC. Rent of the factory building, yes, we can take, so there is no restriction. Raw material Y also we can take, there is no restriction. However, car purchase for use by the director, motor vehicle used for transportation of persons, capacity does not exceed 13 and not covered under exceptions. What are the 3 exceptions? The 3 exceptions are, so used for further supply. That is either we are into the business of buying and selling motor vehicles or renting of motor vehicles. If you buy that motor vehicle car, you can take ITC. And number 2, used in the business of transportation of passengers. And number 3, used for imparting driving skills, that is driving schools. So here it is used for transporting the directors. It is not covered under the exception. Therefore, it is a block credit and ITC not available with respect to this. So these are the 4 invoices. Even though 6 lakhs is given, but this 1,20,000 we cannot take ITC. So therefore we can take ITC only with respect to this 3. Okay, so that is 2 lakhs, 3 lakhs, 4 lakhs and 4,80,000. On 4,80,000 only ITC can be availed. So that is with respect to this. So here if you see 6 lakhs, but we can take ITC only on 4,80,000. And so therefore, now what we need to answer? We need to answer this as not GSTR2A, we need to answer this as GSTR2B. And suppose in the question, if they have given it as 11, instead of 11th November, 13 November only we will be taking, because practically now it is 13 November. Again, I am telling you. So this was a old question given in RTP, which I am just modifying as per the latest amendments. Okay. Then next, what about, so this 4 lakhs. 4 lakhs, so can we take any ITC with respect to this 4 lakhs? So what is this 4 lakhs? The remaining 4 lakhs, if you see, so here serial number, invoices at serial number 5678 not uploaded in GSTR1. So not uploaded in GSTR1, so that is these invoices. So in that, if we have any GST under RCM, that can be taken as ITC, that is on import. So invoice number 5, 6, 7, 8. On this, previously we used to take 5%, but now that 5% also not possible, which means what is the ITC that we will take? 0. We cannot take any ITC with respect to that, only 0 rupees we can take as ITC. Then what about invoice number 9? So invoice number 9 is imports. So imports, so that is not uploaded by the respective supplier in form GSTR1. Actually now they have to do that. So import data is also there in 2B, but even if it is okay, that if it is not updated also, the 6,80,000, so that is Invoice number 9, raw material W imported from China, this 50,000 rupees can be definitely taken as ITC. So there is no restriction. So 50,000 can be taken. So then what is the answer? 4,80,000 plus 50,000. So 4,80,000 plus 50,000, that is 5,30,000 can be availed as ITC. So 4,80,000 plus 50, 5,30,000 is the revised answer. So this is how the question could be asked. Now we are moving on to the next amendment in input tax credit, that is reversal of ITC on account of non-payment of consideration to the supplier within 180 days from the date of invoice. So this was already a well-established concept which is already there. So let me just give you the clarity about this provision, and then we will see what are the amendments in this. So first it says, like, whenever a recipient is required to make payment to the supplier, even if the recipient has not made payment to the supplier, so he can take ITC. So the payment to be made to the supplier is not a condition for the purpose of availment of ITC, so recipient can take ITC. However, there is a condition that as per rule 37, section 16 subsection 2 read with rule 37, the recipient has to make payment to the supplier within 180 days from the date of invoice. Otherwise, the recipient should reverse so much of the ITC avail along with interest at the rate of 18% per annum from the first date after availment, that is from the date of availment till the date of reversal. This was the provision before. Now, what has happened is that, as I have already mentioned, that now the interest on wrong availment of ITC is not applicable, but only when that wrongly availed ITC is utilized, the interest will be applicable. So therefore, accordingly, rule 37 has been modified. So what is that they are telling in rule 37 is that, first, a person has got the invoice, a registered person has got the invoice related to inward supplies. He can take ITC, he availed ITC, and he did not make payment to the supplier within 180 days. Now, after expiry of that 180 days, whichever month that 180 days expires, for that month, so they will file one GSTR 3B or DRC 3. So in that, they need to reverse the ITC. If they don't have balance in ITC, they need to pay that, along with interest as per section 50 subsection 3 read with rule 88B. So how that interest will be computed? Don't see the month in which avail, see the month in which it is utilized. How do I know as to in which month I have utilized it? Simple. I availed ITC in the month of July, 1 lakh rupees. Now what is the balance in ITC for July, August, September, like that every month you see. For July month, the balance in ITC is 2 lakhs. And the balance in ITC for August month is 1,50,000. The balance in ITC for September month is 50,000, which means the availed ITC of 1 lakh, so became 50,000, which means that 50,000 we have utilized. So what they are doing is that the wrongly availed ITC, so whenever the balance in ITC, the balance in electronic credit ledger falls below the wrongly availed ITC, that extent it is called as utilized. Wrongly availed ITC is utilized. So that's what I said. In the month of July, they wrongly availed 1 lakh and 50,000 could be correct availed ITC. So the balance is 1,50,000. And second 2 lakhs, say 1 lakh correct availed ITC, 1 lakh plus 1 lakh, 2 lakhs, and they have used some 50,000. For the next month, the balance after payment of liabilities 1,50,000, means some availment and utilization, no issue. So because the wrongly availed ITC 1 lakh is just maintained, that 1 lakh is maintained. So there is no shortfall in that 1 lakh, that 1 lakh is maintained. So therefore, first month 2 lakhs, second month 1,50,000, and third month, if you see, it goes below that 1 lakh by 50,000. So that 50,000 is wrongly utilized ITC. Suppose in the third month, if the balance is only 20,000, then the wrongly availed ITC is utilized to the extent of 80,000. So that's how the wrongly utilized ITC will be identified. So therefore, the month for which the wrongly utilized ITC pertains to the due date of that month or the actual date of filing return for that month, whichever is earlier. For example, I said July month, they have wrongly availed ITC to the extent of 1 lakh. I mean, they availed ITC, but they need to reverse it. And now for the month of September, so what is the actual date of filing return? Say the actual date of filing return, that is GST or 3B return, is 18th October or 20th October, the due date, whichever is earlier. So that will be taken as the date of reversal. Okay, and the date of availment, that is utilization, date of utilization and the date of reversal will be accordingly calculated now. Okay, so related to that only, they have clarity given in rule 37. So now, so what does it say in rule 37? So a registered person, there is one registered person who has availed ITC on any inward supply of goods or service or both other than supplies on which tax is payable under RCM, because this 180 days condition is not applicable in 3 cases. What are the 3 cases where this 180 days condition is not applicable? Situation number 1, that is supply covered under RCM where liability to pay GST is on the recipient, and number 2, that is section 9 subsection 3 RCM 93 and 94, and number 2, that is supply without consideration. When the supply itself is without consideration as per 7(1)(c), so the recipient cannot make payment to the supplier, there also 180 days condition not applicable. Number 3, section 15 subsection 2 clause B, that is payment made to some other person on behalf of the supplier. So then in that case, supplier has not received the money, but some other person has received the money. So 180 days condition is not applicable in that case. So that has been retained. There is no change in that. Okay. So that is other than these 3, any other case, the recipient who availed the ITC on inward supply fails to make the payment to the supplier thereof, the amount towards value and tax, the amount towards value along with the tax payable within the time limit stipulated. What is the time limit that is stipulated? 180 days. Okay, shall pay an amount equal to the ITC availed in respect of such supply along with interest. Here, there is one notable point. What is that? Previously, that is in the earlier rule 37, before amendment, in the earlier rule 37, so on proportionate amount which is not paid to supplier, we need to reverse the ITC. For example, if supplier has paid 60%, then 40% not paid, ITC to the extent of 40% only needs to be reversed. But that proportionate word is missing after amendment in rule 37, which means suppose if 60% is paid, 40% is not paid, so the full ITC should be reversed. So this is atrocious. Okay, so this is how, because they have not given the reference of proportionate. So on literal interpretation, so maybe they may give a circular in future related to that, but as on today for your exams, what you need to understand is that first, before amendment, suppose if we pay 60%, so the reversal is only to the extent of 40% not paid. Whereas now, if 60% is paid by recipient to supplier, 40% not paid, but the reversal is with respect to the full amount of ITC availed. Okay, but in interest they are giving the relief because we need to calculate interest from the date of utilization. Okay, maybe for that reason. So along with interest payable thereon under section 50 subsection 3, while furnishing the return in GSTR 3B for the tax period immediately following the period, immediately following the period of 180 days from the date of issuance of invoice. For example, the 180 days gets over by July. So therefore, for July month, we will file one 3B. So in that 3B, so we need to do this reversal of ITC along with interest. And we all know that whenever there is a reversal of ITC, that gets adjusted from which ledger? Electronic credit ledger. Whereas interest payment will be going out of electronic cash ledger. Okay. Then the next one is that, so exceptions, there is no change in that. And thereafter, we have another point, subsequently. So this also there is no change. That is whenever a recipient subsequently makes payment to the supplier, so whatever ITC that has been reversed can be re-availed without any time limit, but the interest cannot be availed as any ITC, that is the loss. Okay. And In this case, the time limit, this also there is no amendment. Previously also same, now also same, time limit. That is, say for example, so we have a time limit for availment of ITC. What is the time limit for availment of ITC? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. That is the time limit. Now, say first we avail ITC. We did not make payment to the supplier. So therefore, we reverse the ITC. Again, we made payment to the supplier. So we are re-availing the ITC. But this time limit for availment of ITC over. It's okay. So for re-availment of ITC reversed earlier. So this time limit is not applicable. So this point, there is no change in that. Now, so what are the points of amendments that you need to remember in this? So the effect of amendment. First point, interest computation period. The interest computation period has changed. So previously from the date of availment till the date of reversal or payment. Now from the date of utilization till the date of reversal or payment. So period for which interest computed has been changed. And number two, so treatment in case of proportionate payment. So previously in case of proportionate payment, so we have to reverse ITC only to the extent of, so that amount which is not paid. But now full amount has to be reversed. So that is the second point. And third point is about the confusion as to the rate of interest, because in section 50 subsection 3, they gave a reference to section 50 subsection 3 gave a reference to interest rate as 24% per annum. But whether 24% per annum is applicable or any other rate is applicable, 18% per annum only. So 24% per annum is not applicable because there is a notification, and in Finance Act 2022, so in 6th schedule, they have made it clear that for wrong availment and utilization of ITC, even though the law uses the word 24%, but the effective rate of interest is only 18% per annum. So that's the third point. And fourth point is that, so because of these amendments, so suppose if I have wrongly availed ITC, that is like I availed the ITC and the payment is not made within 180 days, we reverse the ITC without utilizing it at all, which means that 1 lakh in our example, whatever I said, we took that ITC, we maintained that 1 lakh and we reversed it. So interest shall not arise, okay, in the under this rule 37. So these are the 4 points that you need to remember. All these 4 points are there in the amendments PDF that has been provided to you. Okay, you can download this amendments PDF from my website tharunraj.com under downloads. Not only this, there are a lot of notes which I will be sharing freely to the student. All those downloads will be available in my website itself. You can just go to my website tharunraj.com and click on the downloads. There you can download and you can take a print of it and keep it. Okay, now we are going to see one illustration related to this amended rule 37. So this question is from solved workbook, page number 140, question number 2. It was a ICI November 18 old question. So I just modified it in order to suit the current amendments, okay, based on that, okay. So you can see the question here. Mr. Ashok, a registered supplier of hardware parts, supplied goods worth 1,80,000, 1,68,000 inclusive of GST, CGST 9,000 and SGST 9,000 to measure Shah traders under forward charge on 14/12/2022. So therefore, the invoice date is 14/12/2022, for which the tax invoice was also issued on the same date. So December 2022. But Shah traders failed to make the payment for such supply along with tax to the supplier and avail the ITC of CGST SGST on 21/2023. How? Because for the December month, so they will file 3B by 20th January. So on 20th January, they filed 3B and the ITC has been availed. Such availed ITC is utilized for payment of GST liability of March 2023. So how that fact will be known? So first, what is the wrongly availed ITC? That is 18,000. So now for the month of March, if you see the ITC after filing 3B, for the month of March, the ITC balance would have come below 18,000 rupees. It would have become 0, which means that 18,000 rupees has been utilized in the month of March. Okay, so March 2023. Now here you may get another doubt. Sir, what if they have done like this for multiple invoices? So then how we need to do that way? So in which case, for example, invoice number 1, 18,000, invoice number 2, 12,000, invoice number 3, 10,000. So 3 invoices. For these 3 invoices, payment is not made. Now the balance in ITC has come down. So now it is, the balance in ITC is somewhere like 15,000. So how we need to understand? Simple. So we need to follow FIFO because we don't have any other way. So invoice number 1, so that is the first ITC that has been utilized. So invoice number 2, so invoice number 1 18,000, invoice number 2 will be 12,000, invoice number 3 will be 10,000. So 18 plus 2, 12, that is 30,000 plus 10, 40,000. Now the balance has come down to 15,000, means invoice number 1 ITC has been utilized, invoice number 2 a portion of ITC has been utilized. So like that we need to understand. Okay, so but there is no clarity related to this. This is based on the general application only, but maybe department will be giving the circular sooner or later related to this. Okay, so now for this question, so in March 2023 the ITC avail has fallen below that 18,000, which means that it has been utilized in March 2023. Whether measures short traders is eligible to avail input tax credit on such supply? Yes. First, they can take the ITC because nowhere in section 16 there are conditions that the payment should be made to supplier, then only ITC can be availed. So therefore, they have rightly availed ITC on 21/2023. But check 180 days from the date of invoice. What is the date of invoice? The date of invoice is 14/12/2022. So plus 180 days, if you see, that will be 12/6/2023, 12th June 2023, and the payment is not made. Okay. So payment is not at all made, failed to make the payment along with tax. Okay, which means that, so what is the month in which 180 days expires? June 2023. So by 20th July, that is they need to file 3B. Na? So by 20th July, they need to reverse the ITC. As there is no information as to, so when they are filing GST or 3B, we take that assumption because here they have given that availment is 21, which means that by 20th only they will be filing 3B. So therefore, 12/6. So what is the date of reversal? So date of reversal is 27/2023. That is the date of reversal. So date of utilization we need to take. So date of utilization till the date of reversal. Okay. So what is the date of utilization? Don't take date of availment. We need to get the date of utilization. What is the date of utilization? March month means what is the 3B filed for March? So that will be 20th April. So therefore, date of utilization. Date of utilization, if you see, the date of utilization is 20th April 2023. So for these dates, we need to compute the interest. So that's what I have given. First, ITC that is availed 18,000, date of availment of ITC and date of utilization of ITC. Now that is also what we need to get. Okay. So what is taken as the date of utilization of ITC? The date when we file 3B for the month for which the balance in ITC falls below the limit of availed ITC. So then what is the date of payment? 27. So what is the period? While counting the period, so don't take 24 because usually that is the time limit by which we filed 3B. So we'll take it from the next day. So that is 91 days we will take. So for this 91 days, the interest is 808. So therefore 18,808 is what we need to reverse. 18,008 is in 808 is the interest. Again, as and when the short traders make the payment to the supplier, they can avail the 18,000, but this 808, whatever is paid as interest is a loss to them. Now, the next amendment in input tax credit is related to time limit for availment of ITC. Already we discussed in the similar time limits. So, section 16 subsection 4, the time limit for availment of ITC with respect to any invoices or debit notes pertaining to a financial year is 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. For example, so you take a financial year 2021-22. 2021-22. For this financial year 2021-22, so if there is any invoice or debit note, we can avail the ITC by 30th November 2022 or date of filing annual return. Say the annual return is filed on 31st December. So whichever is earlier, 30th November. Suppose if the annual return has been filed by 15th September, so 15th September 2022 or 30th November 2022, whichever is earlier, so 15th September 2022 will be taken as the time limit for availment of ITC. Now let's see some questions related to this time limit for availment of ITC. So there are few questions in solved workbook related to this, so that I have provided. So the objective of this amendment PDF is not only to give you the amendments, but also the interlinking provisions based on that, and also the questions. So the solved workbook questions, whatever questions that have changed, so that I have updated. Even furthermore, so the entire solved workbook, so what are all the corrections, amendments, everything will be provided to you as an addendum to 10th edition, so which will be uploaded in my website. Okay, so already for previous edition, those who purchased, they updated. For the 10th edition, those who purchased for November 22 and May 23 also, I'll be providing you. So these are from few questions on major amendments, so which have done. And now in that addendum, so each and every question, if there is any correction or if there is any amendment related explanation, that will also be incorporated. But here 90% of the questions based on amendments I have incorporated in this PDF itself. Now you can see this question number 4, which is of page number 141 of solved workbook. So XYZ Limited is engaged in manufacture of taxable goods. Compute the ITC available with XYZ Limited for the month of October 2023 from the following particulars. For the month of October 2023. Inputs A, 1 lakh. One invoice on which ITC payable was 10,000 is missing. So we know that one of the conditions for availment of ITC is that a person who availed the ITC should be in possession of the tax invoice. So even though that gets reflected in GST or 2B, but if the invoice is missing, so he cannot take ITC with respect to this, but only with respect to 10,000. But with respect to 90,000, ITC can be availed. Then second, inputs B, and these are not in the blocked credits. So explanation needs to be properly written in the exam. Then inputs B, 50,000 rupees. 50,000 rupees inputs are to be received in 2 installments. First installment is received in October 2023, current month. So whenever goods are received in lots or batches or in installments with respect to a single invoice, ITC can be availed only on receipt of last lot or last installment or last batch. So in this case, so only first installment is received this month, but the last installment is not yet received this month. So which means that we cannot take ITC with respect to this. Then capital goods, 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST. So section 16 subsection 3 says that for the purpose of computing depreciation under income tax, if GST is also added to the value of the capital goods, then ITC not available. As they have capitalized, so GST component also for computing depreciation, they cannot take ITC with respect to that. Then input services, 2,25,000. One invoice dated 21/2022. 21/2022 means it pertains to which financial year? It pertains to financial year 2021-22 because 20 January 2022. So 21-22. So for this financial year, what is the due date for availment of ITC? 30th November of the succeeding financial year. So 30th November 2022 or date of filing annual return. What is the date of filing annual return? So here date of filing annual return is 15 September 2023. So maybe this could have been 21/2023. 21/2023. So therefore 2022/2023. So then 30/11/2023 or 15 September 2023. So whichever is earlier. So which is earlier? So 15 September 2023 is earlier. But right now we are in which month? October 2023. So definitely we cannot avail ITC with respect to this 50,000. So then on how much amount we can take? 1,75,000 we can take. So therefore 90,000 plus 1,75,000. The ITC that we can avail is 2,65,000. This is the answer for this question. The next question is in question number 17, page number 150. ABC Limited purchased goods valuing 5 lakhs exclusive of GST. So under the cover of invoice dated 25/12/2022. So date of invoice is 25/12/2022. So which means it comes to which financial year? So it comes under financial year 2022-23. For the financial year 2022-23, so what is the time limit for availment of ITC? So that is 30th November 2023 or date of filing annual return. The company has filed its annual return for 2022-23 on 12/8/2023. So therefore, so 12/8/2023 is the date. So whichever is earlier is 12/8/2023. Now what is happening here? The company made the payment to the supplier on same date. Since there was a doubt regarding admissibility of input tax credit on such inputs, the company did not take the ITC at the time of receipt of inputs. The company obtained clarification from a legal consultant and who opined that goods were eligible as inputs. So the opinion was received on 5/5/2023. Is that 5/5/2023 within this time limit of availment of ITC? Yes. So therefore they can take the ITC on 5/5/2023, that is for the month of May 2023 when they file GSTR 3B. In that month 3B, so they can take ITC. That is with respect to this question. Now we are going to see two circulars providing clarifications related to input tax credit. In that, the first circular is about, we have in blocked credits few points like membership of a club, health and fitness center, food and beverages, so then travel benefits extended to employees on vacation, like that. And for this, one proviso is also there, which is an exception to the block credit, which says that suppose if the goods and services, the expenses towards the goods and services are incurred by employer for the employee under a statutory obligation, then ITC is available. Whether this exception is applicable in all cases for that particular block credit or it is applicable only for that food and beverages point. So therefore, now we need to understand that Bare Act portion as to how it is given. So you can have a look into this, that so this is the Bare Act portion. The first point says food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, leasing, hiring of motor vehicles, vessels and aircraft referred to in clause A, clause AA. And membership of a club, health and fitness center and travel benefits extended to employees on vacation. So now they have given one proviso. That proviso says, provided that the input tax credit in respect of such goods and services shall be available where it is obligatory for an employee to provide the same to its employees under any law for the time being in force. Now, the question is what? So whether that proviso which we have seen, is it applicable only for the last point, or is it applicable for all the 3 points, that food and beverages, membership of a club, travel benefits? So for that, so many interpretations were there. There was no clarity, and in my classes also many times I said that this will be applicable for all the 3 because the reference given in that is both goods and services. Accordingly, recently CBIC gave a clarification stating that that proviso is applicable for all the 3 cases, that food and beverages, outdoor catering, health services and insurance service, membership of a club and travel benefits provided to employees on vacation. For all these 3 cases, that proviso will be applicable. So if it is under the statutory obligation incurred by employer to employee, then they can take ITC with respect to that. The second circular is related to hiring, renting and leasing of motor vehicles. Generally, motor vehicles is blocked credit. So, motor vehicles is divided into 3. So, motor vehicles are broadly divided into 3. So, the first one is motor vehicles used for transportation of persons. Then number 2, vessels and aircrafts. Number 3, other motor vehicles. Other motor vehicles, ITC always available. Whereas, so motor vehicles used for transportation of persons is further divided into 2. So that is, capacity does not exceed 13 and capacity exceeds 13. If capacity does not exceed 13, which means that, so it is a block credit, but we have 3 exceptions. What are those 3 exceptions? Used for further supply, used in the business of transportation of passengers, or imparting driving skills. Other cases, block credit. But if the capacity exceeds 13, ITC available, it's not a block credit. Vessels and aircrafts is block credit, and we have 3 exceptions. So already what we have seen, the same plus one more exception is also there. So that is, first exception used for further supply, second used in the business of transportation of passengers, third imparting driving skills, and fourth used for the purpose of transportation of goods. So this is about blocked credit related to motor vehicle. Now there are 3 services in relation to this motor vehicles, so on which ITC available if the motor vehicle is eligible for ITC. So service number 1, insurance, general insurance. Service number 2, that is authorized service station services. Number 3, repair and maintenance service. So these 3 services in relation to motor vehicle available for ITC if motor vehicle is eligible for ITC. If motor vehicle is block credit, on these 3 services also ITC cannot be available. Now for this, one more point also we have, that is hiring, renting and leasing of motor vehicles. Hiring, renting and leasing of motor vehicles eligible for ITC if the motor vehicle is eligible for ITC. For example, a company purchases a car for transporting its employees, blocked credit. Now if the company takes the car on rent, that rent is also blocked credit. Now the issue here is that whether this hiring, renting and leasing of motor vehicles point, so that hiring, renting, leasing is applicable only for motor vehicles, or it applicable for all kind of goods. Suppose if there are some capital goods which are block credits, so if you take it on rent, so whether ITC available? No, strictly no. So that hiring, renting and leasing of motor vehicles point is applicable only in case of motor vehicles, not in case of any other goods. So that's the clarification given. Now, the last amendment in input tax credit chapter is that while computing the turnover for the purpose of Rule 42 and Rule 43, what is Rule 42? Whenever we have some inputs and input services which are used commonly for taxable outward supplies and exempted outward supplies, or partly business and partly non-business purpose, so proportionate ITC is available, and we need to reverse the ITC to the extent of common ITC into so exempted turnover divided by total turnover. So this is the ITC to be reversed in terms of Rule 42. Same way, in terms of Rule 43, when capital goods are partly used for taxable and partly used for exempted, or partly business, partly for non-business purpose, we need to do the same way. Monthly ITC. So monthly ITC is total ITC divided by 60 months into exempted turnover divided by total turnover. So this is how the formula is. Now while computing the turnover, so we have to remember few points. What is that? There are certain taxes, even though it should be included for the purpose of value as per section 15(2)(a). Section 15 subsection 2 clause A says that any taxes, duties and cess by whatever name called other than GST should be included in the value. For example, if you take the old indirect taxes like central excise duty, state excise duty, central sales tax and value added tax, these four are other than GST and should be included in the value for the purpose of section 15(2)(a). But when you do the computation of turnover for the purpose of Rule 42 and Rule 43, in the turnover, we should not take this, even though these are included for the purpose of 15(2)(a) value, but in valuation chapter, these are included. But here, in input tax credit chapter, for the purpose of computation of Rule 42 and Rule 43, proportionate ITC, so we should not take these four into the turnover. Now, like that, one more point has been added, that is sale of duty credit scrips. As per foreign trade policy, there will be MEIS, SEIS and the latest RODETP scripts, duty credit scripts are available. What are these duty credit scripts? Depending upon FOB value of your exports, a percentage of FOB value of exports will be given to you as a duty credit script, which can be used for payment of customs duty. Now, this duty credit script I have got, say for example, I have got a duty credit script for 10 lakhs. Now, this 10 lakhs worth of duty credit script I am not going to use because I don't have import. Then what I am going to do with this? So, this duty credit script I can sell it to another person. Say I sold it for 8 lakhs. So people are ready to buy. Why people are ready to buy for 8 lakhs? Because they will get the benefit of 10 lakhs because that duty credit script they can use for payment of the customs duty to the extent of 10 lakhs. So they are willing to pay 8 lakhs to me for sale of this duty credit script. Whether this 8 lakhs to be included in the turnover? No. So now the latest amendment says that, so this portion, duty credit script, sale value of duty credit script, not to be included in the turnover for computation of Rule 42 and Rule 43. Let's see the amendments in segment number 7, exemptions and charge. So this particular segment, lot of amendments are there in this segment, exemptions and charge. So now the entire amendments in this segment, exemptions chapter, is divided into 4. So first we will see, so omission of certain exemptions. What are the exemptions that are omitted? Second, we will see addition of new exemptions. Then third, amendments to the existing existing exemptions. Amendments to the existing exemptions. Finally, we will see circulars or clarifications on exemptions. These are the 4 areas that the entire set of amendments, lot of amendments are there. I am just grouping into these 4 areas. Now, let's start with the first one, that is omission of existing exemptions. What are the existing exemptions that got omitted? So, in that, few points are there. The first one is about, we have in government services one exemption. So, first I will give you what was the exemption and now it is omitted. Okay. So, what was that exemption? Services provided by central government, state government, local authority. So, to any person in relation to activities entrusted to it under Article 243G or 243W of the Constitution. So, that's what we used to remember as municipality or gram panchayat services. For example, so government is required to provide completion certificate to a builder. So, for giving the completion certificate to the builder, so they have collected some charges. Now, in this case, previously the charges were exempted. Now, it will become taxable. However, this exemption is continued. This exemption is continued now for government authority and government entity. So, this exemption was previously applicable to government, that is central government, state government, local authority, government entity. So, now this exemption is applicable only to government authority or government entity, but not to central government, state government and local authority. So, when we discussed government services, in that government services, so there were some specific exemptions. In that specific exemptions, the first exemption, municipality or gram panchayat service is not applicable now for the government, which means that exemption not available, as the exemption is omitted, so it will become taxable. That is with respect to this. Then next one is about Department of Post. Services provided by Department of Post was previously divided into 2. That is speed post, express parcel post, life insurance and agency service provided to a person other than government is taxable. All other services of Department of Post is exempted. This was the amendment. All other service of Department of Post was exempted. This was the amendment. Now, completely this has been omitted, and what they are telling is that only certain activities of Department of Post, that is basic mail service. What is basic mail service? That is postcard, inland letter or any registered post or book post where the value of the parcel is less than 10 grams. This case is only exempted. So, what are the cases which is exempted? Postcard, inland letter, registered post or book post where the weight of the parcel is less than 10 grams is only exempted. All other activities of Department of Post will be taxable. For example, if Department of Post is collecting some 100 rupees for the purpose of Aadhaar activation. Now, in that case, previously that 100 rupees was not chargeable to GST because they were covered under other service of Department of Post other than speed post, express parcel post, life insurance and agency service. But now, it will be covered under taxable, because now what is exempted? Only postcard, inland letter, book post or registered post where the weight is less than 10 grams. So, all other activities of Department of Post is taxable, therefore, this amount is also taxable. Next, the next one is related to renting of immobile property for temporary stay. So, there is a commercial property like hotel, club, campsite, inn, guest house, by whatever name called. So, it will be given on rent for a temporary stay. And previously, so we had this exemption, that is, if the rent per day less than or equal to does not exceed 1000 rupees per day or equivalent, then it was exempted. Now, this exemption is omitted, which means even if the rent in hotel, that is day charges, so if it is less than 1000 rupees or 500 rupees, 200 rupees also, it will be taxable. So, that's where I used to tell in the class, hostel. So generally hostels will not be charging GST because hostel amount will be, the monthly hostel charges will be say somewhere 15,000 rupees. So per day equivalent, if you see, it will be like approximately 500 rupees, which was less than or equals to 1000. So therefore that was exempted. But now, so this exemption is omitted, which means every temporary accommodation that can be called with any name, whatever may be the charges, it will be taxable because this exemption has been omitted. However, there is another point, that is renting of the precincts of a religious place meant for general public. So for pilgrims and all, okay. So renting of precincts of a religious place for general public. So for accommodation where per day it is less than 1000 rupees is exempted. So that exemption is there. So for religious places, when they give it on rent for accommodation purpose, temporary stay, there the exemption is there, less than 1000. There is no change in that, that is there. But the other exemption which talks about normal renting for temporary stay, commercial property, so per day less than or equals to 1000 rupees or equivalent, so that is only omitted, which means it will become taxable now. Then next one, transportation of goods by vessel from India to outside India, as well as transportation of goods by aircraft from India to outside India. These two were exempted up to 30/9/2022. With effect from 1st October 2022, these two exemptions are omitted, which means now transportation of goods by vessel from India to outside India will be taxable. Now, what is the chart that we need to remember for transportation of goods by vessel and aircraft, international transportation? So first, transportation of goods, this is with effect from 1/10/2022, divide into two, by vessel and by aircraft. Vessel, divide into two, India to outside India also taxable, outside India to India also taxable. Outside India to India was taxable even previously, now also. So India to outside India is now taxable with effect from 1/10/2022, that is related to vessel. Then related to aircraft, again divide into two, India to outside India taxable with effect from 1/10/2022. Outside India to India was exempted, even now also it is exempted, there is no change in that. So India to outside India becomes taxable, that is with respect to this. Then next amendment is related to specified goods transported in railways and vessel between places in India by coastal waters. So transportation of specified goods by railways. So there were 7 specified goods. That is, first, if you see, agricultural produce, food grains including flours and pulses, milk and salt, newspapers and magazines, organic manure, relief material for natural or man-made disasters, defense and military equipment, then railway equipments. Now that railway equipments is omitted, only 6. Then same way, transportation of specified goods in coastal waters between places in India was also exempted. 7 goods, the 7 goods, but in that 7 goods also railway equipment were there. Now it is omitted. So which means only 6 goods. So these 6 goods are the specified goods. If transported in 3 modes, it is exempted. What are those 3 modes? Number 1, transportation of specified goods by railways, transportation of specified goods by coastal waters between places in India. Then this transportation of specified goods by GTA. For GTA, previously also 6 only, now also 6 only. So now these 3 got streamlined. In these 3 places, the specified goods are 6 specified goods, that is agricultural produce, food grains including flours and pulses, milk and salt, organic manure, newspapers and magazines, relief material for natural and man-made disaster, defense and military equipment. Okay. Then next omission is related to GTA, Goods Transport Agency. So Goods Transport Agency, so there were one exemption like goods are transported in a single carriage where the freight does not exceed 1500 rupees. One more point also, goods transported with respect to a single consignee where freight does not exceed 750, like the two exemptions were there, and we had a confusion also, in which case 1500, which case 750. These 2 points are now omitted, which means that single carriage 1500, single consignee 750 is not applicable, which means if GTA is transporting goods, then only 3 exemptions now. Previously 5 exemptions, now 3 exemptions. So what is the revised chart? That is GTA services divided into 2. Only 3 exemptions. Specified goods, just now we have seen. And number 2, that will be, that is if the recipient is individual, HUF, AJP and not having a factory. And the third exemption is if the recipient is central government, state government, local authority or any entity registered only to deduct TDS, then it is exempted. Whereas other cases, GTA service will be taxable. Okay. Then the next one is about agriculture related services. We had one point, storage and warehousing of certain produce, whether or not agricultural produce was exempted, like jaggery, cereals and pulses, nuts and spices. Then even we had raw vegetable fibers such as cotton, flax, jute, then tea and coffee. So like that we had some goods. Now they have omitted everything. So if it is agricultural produce, by default it is exempted. That is storage and warehousing of agricultural produce is by default exempted, because storage and warehousing of agricultural produce will come under any service in relation to agricultural produce, no doubt, that is exempted. So they have omitted all the goods. Now only one they have given, that is cereals and pulses. Cereals and pulses, even though not agricultural produce, but its storage will be exempted. But sir, cereals and pulses are agricultural produce, right? No, not necessary. If it is a whole grain, then it will be agricultural produce. For example, if you take black channa or that Kabuli channa, that is a whole grain, that is agricultural produce because it is taken from the plant, sun dried, agricultural produce. But so if you see this processed one, that is the gram dal, from that it will be split, the husk will be removed, it will be split into 2, polishing will be done. So we have this gram dal. So that gram dal will not be coming under agricultural produce. So that is processed. So but its storage is exempted, cereals and pulses. Now only storage of cereals and pulses is exempted, but the other list of goods are omitted. Then the next point related to agricultural sector is, previously fumigation services were exempted. Fumigation in a warehouse to keep agricultural produce is exempted, was exempted, but now this exemption is withdrawn. So there is a warehouse where we keep agricultural produce, and for that warehouse some fumigation services like insecticides, pesticide service will be received. That service was exempted, but now it became taxable and it will become taxable now. Okay. Then next one related to the same agricultural sector is slaughtering of animals. So in couple of times in my class also I used to tell what is the point of giving exemption to the slaughterhouses will be collecting, like will be getting animals, they kill the animal, they take the flesh and they will be selling it. So these slaughterhouses will be providing slaughtering services, so that money collected was exempted, now it becomes taxable. Then the next point is services provided by RBI was exempted. So RBI providing any services was exempted, but now it became taxable. Same way SEBI and IRDA, these 3 you need to remember, RBI, SEBI and IRDA, if they provide any services, that was exempted, but now it became entirely taxable. Any service provided by RBI, any service provided by SEBI and any service provided by IRDA, these 3 services previously was exempted, now it became taxable. Next, for RBI, one more exemption was there, import of services by RBI in relation to management of forex reserves was exempted previously. So RBI import services in relation to management of forex reserves was exempted. Now that exemption is also omitted, so which means it becomes taxable. Then next one we have FSSAI. So in government services we have discussed that is specific exemptions with respect to government. FSSAI license to food business operators. Usually, FSSAI license is obtained by all food business operators, then only they can run the business related to supply of food. So, these FSSAI license charges was exempted. Now, it became taxable. And even services provided by GST network to government was previously exempted. Now, it has been omitted. So, because anyhow GST network is now going to be a 100% government entity. So, for that reason, they have removed this exemption. The next one is related to health services. In health services, we had one exemption. Services by way of preservation of stem cells by cord blood banks was exempted. Okay, cord blood banks will be preserving the stem cells. That was exempted. Now, they have omitted that exemption, which means that cord blood banks which preserves the stem cells, so that newborn babies, that umbilical cord, whatever is the blood, from that stem cells will be extracted and preserved. For that, they collect some charges. So, that charges collected by the cord blood banks is now taxable. And last omission is related to, so services provided by, so this waste treatment, medical waste treatment operators, biomedical waste treatment operators was exempted. So, under healthcare services, so these biomedical waste treatment operators collect the medical waste from various hospitals, properly recycle it and dispose it off. That was previously exempted, and now that exemption is now omitted, which means now it will become taxable. So, this are the 20 points that we have. So, you can check the notes. So, these are the 20 points that we have related to omission of existing exemptions. Now, we are going to look into new exemptions that are added into the list of exemptions as per notification 12/2017. Already there is a list for the 2 new exemptions were added. In that, the first exemption is already related to the Department of Post. So, what is the Department of Post? So, already we know that Department of Post providing services by way of postcard, inland letter, book post or any parcel. So, wherein the weight of that parcel is less than 10 grams, then it is exempted. Now, there is a second exemption that is newly added. We have the connecting exemption to this, and services provided by a Indian tour operator in relation to a foreign tourist where the tour is wholly conducted outside India was exempted. Now, also it is exempted. But what if the tour is partly in India and partly outside India? Whether the exemption will be applicable? No. The previous exemption what was given will not be applicable. So, that is why they created a new exemption which says that if there is an Indian tour operator who provides tour operator services to a foreign national in relation to tour partly in India and partly outside India, then in that case exemption is available to the proportion of the charges collected for the tour conducted outside India. How to compute that proportion? So, what is the exemption? Services provided by Indian tour operator to a foreign tourist in relation to tour conducted outside India. Exemption is available. So, what is that exemption that is available? Exemption is to the extent of tour which is conducted outside India. But how to determine the exemption with respect to the tour that is conducted outside India? For that they are telling, take the entire amount collected for the tour into number of days the tour is conducted outside India divided by total number of days of the tour. The tour is for say 10 days. In that 6 days outside India and 4 days in India. So, based on that proportion you determine, or 50% of the total tour amount collected will be with respect to outside India. That portion is only exempted. So, the remaining will be taxable. So, what is the exemption here? Total consideration into number of days tour conducted outside India divided by total number of days, or 50% of the total consideration, whichever is less will be taken as the exemption. So, the remaining portion will be taxable. So, that is how they have given the exemption. Let us see some illustrations based on this. So, a tour operator provides a tour operator service to a foreign tourist as follows: 3 days in India, 2 days in Nepal. Now, partly in India, partly outside India. What is the total amount charged? 1 lakh. Now, what is the exemption? 1 lakh into number of days outside India, that is 2 divided by 5. So, 1 lakh into 2 by 5, that is 50,000, or 50% of the total consideration, that is 1 lakh into 50%, that is 50,000. Whichever is lower is exempted, that is only 40,000 is exempted, because 1 lakh into 2 by 5 is 40,000. That 40,000 is only exempted. So, what is the taxable value remaining? That is 60,000. Same way, another illustration, 2 days in India and 3 nights in Nepal. Now, in that case, so 3 by 5 or 50,000, whichever is exempted. So, 1 lakh into 3 by 5 is 60,000 or 50,000, whichever is lower is exempted, that is 50,000 is exempted, and remaining 50,000 will be taxable. Yet another example, 2.5 days in India and 3 days in Nepal. Then how we need to count this? So, we will take any part of the day, we will be taking it as full day. So, for that, one explanation has been provided. What does it say? Provided further that in making the above calculation, any duration of the time equal to or exceeding 12 hours shall be considered as one full day. Greater than or equals to 12 hours will be considered as full day, and any duration of time less than 12 hours shall be taken as half day. So, less than 12 will be taken as half day, more than 12 will be taken as full day. Now, see that this is little peculiar point. Now, what happens here is that 2.5 days in India. So, exactly 0.5 means what? 12 hours. So, that will be counted as full day, and 3 days in Nepal. Okay. But then in that case, sir, so shouldn't we take the 2.5 as 3? No. This explanation is applicable for the purpose of making the above calculation with respect to tour conducted outside India. So, therefore, any duration of time equal to or exceeding 12 hours shall be considered as one full day, and any duration of time less than 12 hours shall be taken as half a day is for the tour which is conducted outside India. So, therefore, in this case, so we need to take, so 1 lakh into tour conducted outside India, 3 divided by 5.5. So, total, no change in that, and that will come to 54,545, or 50% of 1 lakh, whichever is lower. So, that will come to 50,000, that is exempted, and remaining 50,000 will be taxable. Then there is one question related to this Department of Post. This is from solved workbook, question number 14, page number 227. Department of Post provided the following services to general public during the month ended 30/9/2022. Basic mail service by way of postcard or inland letter. So, this alone is exempted. All other service of Department of Post will be taxable. So, transfer of money orders taxable, insurance taxable, distribution of mutual funds taxable, postal orders taxable, collection of telephone and electricity bills taxable, speed post, express parcel post, everything will be taxable except the first one. So, previously many exemptions were there, but now everything will be taxable except the first one. So, therefore, the value of taxable service will become 2,300 in this case. This is the updated chart related to government services. So, government services are divided into two: specified activities and other activities. Other activities are not covered under supply, only specified activities are covered under supply. What are those specified activities? So, first, Department of Post, transportation of goods or passengers, services to an aircraft or vessel inside or outside the precincts of a port or airport, and services to business entities. These four are covered under supply. All other activities are excluded from supply. In the Department of Post, so what is that? So, that is a postcard, inland letter, book post and ordinary post. So, that will be exempted, and any other case will be taxable. So, all other cases will be taxable, and it will be taxable under FCM. This case is only exempted. And then transportation of passengers. So, normal, that is whatever is the transportation of passengers in general, that is applicable for both government as well as to a private person. Then this, no amendment, this will be taxable even previously, now also. Services provided to a business entity. Previously, we had many exemptions, but now we have only 14 exemptions. What are they? So, any amount collected under Right to Information Act. interdepartmental services. Assignment of right to use telecom spectrum assigned before 1/4/2016, both one-time charges and annual royalty. Assignment of right to use natural resources, only annual royalty, assigned before 1/4/2016. Assignment of right to use natural resources to an individual farmer. Then registration charges under any law, safety certificate charges, then birth certificate, death certificate, visa, passport, driving license, consideration for tolerating an act, then MOT charges under customs, then profit petroleum, then guarantee commission for guaranteeing the loans taken by PSU, then services by state government to excess royalty collection contractor. So this FSSAI license was exempted, now it becomes taxable. Then, so 14th, last one is national permit or permit charges for travel from one state to another state. So these are the specified activities, and remaining part in this is same, there is no change in that. Have a look into this question number 12 in page number 226. Compute the value of taxable service in each of the following independent cases. Services provided by government to various individuals by way of issuance of driving license. So driving license previously was also exempted, now also exempted, so there is no change in that. Services provided by BIRAC approved bio-incubators to incubates, previously also exempted, now also exempted, there is no change in that. Transportation of passengers by ropeway was taxable previously, now also taxable, there is no change in that. But see this, express parcel post service provided by Hands-off Post Office, Express Postal Pass Service. So any service provided by Department of Post other than that specified will be taxable. So consequently it is taxable. So total 13,20,000 will be taken as the answer in this case. Let's look into amendments to the existing exemptions. In that, so GTA services, after omission of 2 points, we know what are exempted in case of GTA services. And previously, GTA Goods Transport Agency was having option to pay GST either under FCM, or they can select RCM option wherein liability to pay GST is on the consignor or consignee who is liable to pay the freight. And if GTA is opting to pay GST under FCM, so the rate of GST will be 12%. And if GTA opts for RCM, then the recipient has to pay GST at the rate of 5%. Now, there is an amendment in this which says that under FCM option itself, there are 2 options available to GTA. If they want ITC, they can go for 12%. If they don't want ITC, they can pay GST at 5%. RCM always 5%. Now we have 3 rates. So what is the revised chart related to GTA service? First, Goods Transport Agency service. Goods Transport Agency service means any person who is engaged in transportation of goods by road and issues a consignment note by whatever name called. Divide into 2. So we have first exemptions. What are that exemptions? 3 exemptions: specified goods, and if the recipient is individual, HUF, AJP not having a factory, if the recipient is government which is registered only to deduct TDS, exempted. Then other cases taxable. That is again divided into 2. Option 1, option 2. Option 1 FCM, GTA will pay. Option 2 RCM, consignor or consignee will pay. Option 1 GTA will pay. Now in that case the rate of GST will be 12% with ITC, 5% without ITC. If they want to take ITC, 12%. If they don't want ITC, 5%. RCM option, 5% recipient will pay. And when they need to choose this option, previously there was no restriction. They can change between these options like anything with respect to each invoice, but now there is a clarity that is given. What is that? So GTA has to decide either option 1 or option 2 in the beginning of the financial year by 15th March of the preceding financial year. By 15th March of the preceding financial year, they should decide as to which option they are going to go for the current financial year. For example, if the current financial year is 2023-24, so by 15th, before 15th March 2023, they need to decide as to whether they go for option 1 or option 2. In that also upon availment of ITC or without availment of ITC, so that they need to select. So this is the revised chart related to GTA services. Now we will see the amendments in renting. So with respect to renting, there are few omissions which we already know. That is, so if there is a commercial property which is given on rent for a temporary stay, residential purpose. So previously that less than or equals to 1000 was exempted per day or equivalent, and now it will be taxable fully. Now they have made one incorporation into this amendment related to renting, that is, previously renting of immobile property which was a residential property for residential purpose was fully exempted. Now they are telling that residential property given on rent for residential purpose to a registered person is now taxable under RCM. So why this exemption was withdrawn? So they have incorporated that only exemption is available if the residential property is given on rent to an unregistered person. If it is given on rent to a registered person, it will be taxable. So let's try to understand the background for this. Lot of people will be giving their houses on rent to corporates. So the corporates will be using that as guest houses for their employees or clients, etc. So this was actually for a commercial purpose, but so that is used for stay. Therefore, it will be considered as residential purpose, and that property owner will not be paying GST. Consequently, on the corporates, there was no GST burden. Now, the intention of the government is that they want to tax this. So what they are telling, you are a property owner, you are giving your immobile property, which is a residential property, on rent to a corporate, which is a registered person. Even though it is used for residential purpose, okay, let that recipient pay GST. You don't have any problem. So it will be taxable under RCM in the hands of that recipient. Now, what is the revised chart related to renting? So renting, including leasing, hiring, divided into two: movable property, immobile property. Movable property, there are no changes. So what is that? First, so hiring of a motor vehicle that has a capacity to transport more than 12 passengers given to a state road transport corporation is exempted. Second, hiring of a motor vehicle to a goods transport agency that can carry goods is exempted. Third, hiring of a motor vehicle which is an electric motor vehicle having a capacity to transport more than 12 passengers to a state road transport undertaking was normal motor vehicle, but this is electric motor vehicle to a local authority. Whereas last one, hiring of a bus to a person who provides transportation services to education institution up to 12th standard, that is category 1 education institution. Previously also those 4 exemptions, now also those 4 exemptions. Any other renting of movable property will be taxable. In that we have RCM, which case renting of motor vehicles. So if the supplier is other than body corporate, if the recipient is body corporate, and if the rate of GST is 5%, then it will be RCM. Otherwise, renting of movable property will be coming under FCM. So there is no change with respect to renting of movable property. Whereas immobile property is divided into two. Immobile property, renting of immobile property, whether it is residential property or commercial property. Residential property, so for residential purpose or commercial purpose. Residential property for residential purpose divided into two. To a registered person, taxable under RCM. To an unregistered person, will be exempted. Residential property for commercial purpose, always taxable. And commercial property, renting of commercial property, always taxable. There is no change. Renting of commercial property, always taxable. Renting of residential property for commercial purpose, also always taxable. Renting of residential property for residential purpose to unregistered person is only exempted. To a registered person is also taxable under RCM. Have a look into this question from solved workbook, page number 223, question number 9. Mr. X is the owner of a residential building. So it's a residential property in a commercial locality. Furnishes the following information relating to the said building for the month of June 2023. Basement is leased to Mr. B, a wholesaler, for a monthly rent of 2,40,000. Mr. B uses 1/5 of the basement for his office and remaining portion as go down for storing his merchandise. So it's a residential property given on rent for what purpose? Commercial purpose, given on rent for commercial purpose. So it is taxable. But whether it is taxable under FCM or RCM, only renting of residential property for residential purpose to a registered person is covered under RCM, but renting of residential property for commercial purpose is not covered under RCM, so that will be taxable under FCM only. So in the hands of property owner, only it will be taxable. So therefore, this 2,40,000 will be taxable under FCM in the hands of Mr. X. taxable under FCM. Then the next one, ground floor given on rent to Mr. C. Who is Mr. C? An unregistered person for a monthly rent, and C uses the same as residence. So renting of residential property for residential purpose to an unregistered person was exempted, is exempted. Then renting to PQR Private Limited registered person, first floor, for a monthly rent of 40,000, they use the same as guest house for their employees. So for residential purpose, so renting of immobile property, that is residential property for residential purpose to a registered person, so it will be taxable under RCM. So it will be taxable under RCM in the hands of PQR Private Limited. Then large vacant land in the backyard given on rent for 5,40,000 per month to a parking contractor. So it's a residential property given on rent for commercial purpose. So it will be taxable under FCM in the hands of Mr. X. Then terrace given on lease for a monthly rent of 5,20,000 to Universe Telecommunications. So same. Residential property given on rent for commercial purpose, it will be taxable under FCM in the hands of the property owner. So therefore 2,40,000 plus, so this 5,40,000 plus 5,20,000, this will be taxable in the hands of X, value of taxable supply, whereas even though this 40,000 is taxable, but that will be taxable in the hands of PQR Private Limited under RCM. So if you see the value of taxable supply, that will be 13 lakhs in this case. Let's see the amendments in transportation of passenger service. Previously, we had one amendment with respect to transportation of passengers by airways, where the starting point or ending point of the passenger is in northeastern state or Bagdogra in West Bengal. So the ticket was exempted. So transportation of passengers where the point of embarkation or disembarkation, starting point or ending point is in northeastern states. So what are those northeastern states? So Manipur, Mizoram, Tripura, Nagaland, then Arunachal Pradesh, Assam, Sikkim and Meghalaya. So this MMT and Assam. So these places are Bagdogra and West Bengal, either the starting point of the journey or ending point of the journey was exempted. The ticket was exempted. So that's where I used to tell an example that a passenger starts from Chennai to Bagdogra in West Bengal. As the ending point is in that list of states, therefore this ticket will be exempted. Again, he books another ticket from Bagdogra to US. So that ticket will also be exempted. Why it will be exempted? Because the starting point is in that place. Now, this exemption is retained, but this exemption is applicable only for economy class, not for the business class. So previously also this exemption was there. Now also this exemption is there, but now this exemption is restricted only in case of economy class. If it is in business class, it will be taxable. Let's see the amendments in healthcare services. In healthcare service, already we have seen few omissions. That is, so services provided by cord blood bank was exempted, now taxable. Okay. Second point, biomedical waste treatment operators was exempted, now taxable. So these 2 points. Apart from that, now they are telling if there is renting of rooms by hospital to inpatients, renting of rooms by hospital to inpatients. So this was previously fully exempted, but now they are telling the exemption is available with respect to this renting of rooms by the hospitals if per day rent does not exceed 5,000. If per day rent exceeds 5,000, fully it will be taxable, because in hospitals there are wide range of rooms like single rooms or double sharing rooms and like a dormitory kind of rooms, like lot of types of rooms are there, and with luxuries also. Now the basic set of rooms will be exempted, so does not exceed 5,000 per day. If it exceeds 5,000 rupees, entirely it will be taxable. But which rooms? Is it ICU? No. For ICU, I'm not talking about ICU charges. ICU charges, so in whenever the surgery or operation needs to be conducted, so that patient will be kept in intensive care unit. For that they collect. So 10,000, 20,000, 40,000 also, that will be fully exempted. Whereas even critical care unit, CCU, ICU, then critical care unit, CCU, then intensive cardiac care unit, ICCU, or neonatal intensive care unit for the kids. So all these intensive care unit charges, whatever may be the amount, that will be exempted. Apart from that, once the surgery or operation is over, the patient will be kept in observation in some rooms, and before sending them into ICU also, they will be admitted into some rooms. So those room charges will be exempted if it does not exceed 5,000, whereas ICU charges, etc., that will be completely exempted, whatever may be the amount. So that is with respect to this. So now we need to understand as to what is the chart related to this. You can see here, room charges collected by a clinical establishment for providing healthcare services. It is divided into two: ICU charges, CCU charges, ICCU charges, or NICU charges. These are all related to ICU, fully exempted. Other room charges divided into two: charges per day does not exceed 5,000, exempted; charges per day exceeds 5,000, so fully it will be taxable. Now, what is the revised chart related to healthcare services? So the revised chart related to healthcare service is same, but only three changes we need to remember. So change number 1 is related to that omission of cord blood banks. Change number 2, services of common biomedical waste treatment operators, and change number 3 is related to this room charges. Let's see amendment with respect to training in recreational activities relating to arts, culture and sports. Previously, so there was an exemption which says that training in arts or culture, training services provided by any person in relation to arts or culture was exempted. Now, training in recreational activities relating to arts or culture provided by an individual is only exempted. Previously, by any person was exempted. For example, there is a firm, partnership firm, which conducts dance classes. Money collected for that was previously exempted because arts. But now, that partnership firm, if they collect, that will be taxable. Only collected by an individual will be exempted. And with respect to sports, previously also we had this point, only registered as a trust, it was exempted. Now also it is exempted. For example, cricket academy, so which is registered as a trust, collects fees, will be exempted. If it is not registered as a trust, it will be taxable. So what is the revised chart that we need to understand? Training or coaching in recreational activities. Divide it into two: arts or culture and sports. Arts or culture, divide into two again. That is, by individual or by others. By individual exempted, by others will be taxable, fully taxable under FCM. Whereas sports, divide into two. That is, by charitable trust, 12A or 12AB trust, exempted. Others, it will be taxable entirely and it will be covered under FCM. Now we are going to look into the last area in exemptions, that is circulars on exemptions. So there are many circulars related to these exemptions. So let's try to understand what is the issue and what is the clarification that has been provided with respect to that. The first circular is about GST on entrance fee. Entrance fee or any eligibility certificate issuance fee or transfer certificate issuance fee collected by educational institutions, will it be taxable or exempted? So for that, we need to understand what was the existing exemption. Any service provided by an education institution to its students, faculty and staff is exempted. So now, from whom they are going to collect this entrance fee or eligibility certificate fees or transfer certificate fees, etc., TC fee and all? From the student. So therefore, that money collected by education institution towards, either admission or for the purpose of issuing any transfer certificate or any eligibility certificates will be exempted under this point. Now, the second circular is related to warehousing of cotton in baled or ginned form. So whether warehousing of cotton is exempted. Previously, so warehousing of raw vegetable fibers such as cotton, flax, jute was exempted. Now that omission has happened, so that is not exempted now. So consequently, so warehousing of cotton will become taxable. But if it is an agricultural produce, see, the moment cotton is in baled or ginned, which means that we are taking it and we are packing it, crushing it and we are rolling. So therefore, this baled cottons will not be coming under agricultural produce, so that will become taxable. Then the next issue is with respect to services in relation to transit cargo to Nepal and Bhutan. So what is this transit cargo to Nepal and Bhutan? Nepal and Bhutan are landlocked countries, so fully surrounded by land. And Nepal and Bhutan is having a MOU with India where any goods will be imported into a port in India and will be taken to Nepal and Bhutan. So this transportation is known as transit cargo to Nepal and Bhutan. Any service in relation to transit cargo to Nepal and Bhutan is exempted. It can be loading, unloading, transportation, warehousing, all services in relation to transit cargo to Nepal and Bhutan is exempted. Now the issue is whether this exemption is applicable even in respect to the return journey from Nepal or Bhutan to India for export. Yes. So whether it is for import into Nepal and Bhutan, that is both journeys, to Nepal and Bhutan and from Nepal and Bhutan, both ways it will be called as transit cargo, and any service in relation to transit cargo to or from Nepal and Bhutan, to or from Nepal and Bhutan will be exempted. That is a clarification provided. The next issue is with respect to services provided to government. We have an exemption which says that pure services provided by any person to government in relation to functions entrusted to the government under Article 243G or 243W of the Constitution. That is, government is required to do certain activities, but they are not doing it, they are outsourcing it to one person. Now, I am providing services to the government, but it is in relation to the function entrusted to the government under Constitution. For example, so this solid waste management is the job of the government, but government is not doing the solid waste management, that is cleaning the garbage from the household. So they are not doing, they outsource it to one person. So that person provides service by way of solid waste management. The money collected by that person will be exempted. Now the issue here is that whether these kind of services provided in relation to sanitation, conservancy, etc. to Indian Army will be exempted or not. So any services provided to Indian Army is not in relation to functions entrusted to government under Article 243G or 243W of the Constitution. So Indian Army is nowhere connected to this municipality gram panchayat services. So therefore, whenever we provide sanitation services to Indian Army, so that will not be covered under this exemption. Consequently, this service will become taxable. The next issue is with respect to preferential location charges collected for the purpose of, along with the lease rentals, for the purpose of giving a long-term lease of land. So we have an exemption which says that long-term lease of land by State Industrial Development Corporation or any entity, either industrial plot or plot for development of infrastructure for finance business to a person, the upfront amount called as salami or any other name, the upfront amount collected will be exempted. So there is a state government industrial development corporation or any entity where government has invested, so 20% or more. Now this entity or state industrial development corporation is giving lease, long-term lease of what? Industrial plot or plot for development of infrastructure for finance business. Now, they collect some upfront charges for giving this long-term lease. Lease rentals will be taxable, but this upfront amount will be exempted. Along with upfront amount, they will be collecting some preferential location charges. That preferential location charges, is it exempted or not? Yes, that is also exempted, which will be part of upfront amount that will be exempted. The next issue is with respect to amount collected by guest anchors when they are hosting certain TV shows. For example, you can see Big Boss. So this Big Boss, there are multiple languages Big Boss is there, and Big Boss style is that they usually rope in so famous celebrities for the purpose of hosting the TV shows. And these people will be paid some honorarium for hosting that shows. So weekly episodes will be there. So weekly they will be paid some amount. So this amount collected by these people will be coming under, so services by performance artist, anywhere it is in the exemption, no. So we don't have any exemption with respect to this. So whatever money that they are collecting, we don't have any exemption, that will be fully taxable. The next issue is with respect to extra charges collected by toll gates for not having FASTag. Usually nowadays vehicles should be having fast tag. So whenever they go through a toll gate, automatically the money gets deducted. Suppose if a vehicle is not having that fast tag, then they need to pay extra charges. Usually it will be double. In the place of 40 rupees, they need to pay 80 rupees. Now, toll charges is exempted. But whether these extra charges for not having that fast tag sticker is also exempted, yes. So for that they gave a clarification, CBSE gave a clarification that is exempted. Not only toll charges, but also additional charges for not having fast tag, even overloading charges. There is something called as overloading charges. Big trucks and all have to pay extra charges apart from the toll charges. That overloading charges is also exempted. The next issue is related to ART or IVF treatment provided to the patients for the purpose of this infertility treatments to people who are not blessed with kids. So this IVF treatment is a famous treatment which is being done. Whether this treatment provided will come under healthcare services, because as per the definition of healthcare services, it says so diagnosis, treatment or care in relation to any illness, injury or diseases, pregnancy, like that it is given. So, but nowhere IVF treatment has been specified. So, for that only the issue has come, for which CBSE gave a clarification that, so this IVF treatment is also healthcare services and whatever money that is collected for this will be exempted. So, usually for this IVF or ART like this procedures, so the cost will be somewhere like 1 lakh, 1.5 lakh, 2 lakhs like that. So multiple set of injections will be put so that the fertility level, egg release, etc. will be increased. So this treatments will be coming under healthcare service and completely it will be exempted. The next issue is with respect to leveling of land and laying down the roads, division of that land into plots and development of that land to make it usable for construction and sale of plots. Is that sale of plots, developed plots, coming under supply or not? In this connection, we need to know that as per section 7 subsection 3, read with section 7 subsection 2 read with schedule 3, that sale of land is excluded from supply. Now, what some real estate developers will do, they will buy a land, okay, an agricultural land or an industrial land, and that land when they purchase, so after that they will do the leveling, they will put that mud, etc. They will do the leveling and they will divide it into plots. So they call it as bits of 1200 square feet or 1000 square feet or 2000 square feet, like that they will make plots, and they will lay down the roads also for that. And even they will do that bore well, all other things, electrical lines, etc. Thereafter, they will be selling the plots. So like at the time when they purchase per square feet, they will purchase for some 1000 rupees, 2000 rupees. And after development, these developed plots will be sold for some 5000 rupees per square feet or 10,000 rupees per square feet, like that. Whether this sale of plots will be taxable or exempted for that. So one circular has been provided which says that that is also sale of land and it will be excluded from supply. However, if they receive the services from a person to develop this plot, the developmental activities and all will become supply and chargeable to GST. Only sale of plot is excluded from supply. The next issue is with respect to renting of motor vehicles versus transportation of passengers. So renting of motor vehicles is covered under RCM, whether transportation of passenger service provided to a body corporate is also covered under RCM. Let's try to understand why this issue has come up with. So renting of motor vehicles will come under RCM if three conditions are satisfied. Supplier is other than body corporate, recipient is body corporate, and the rate of GST is 5%. If these three conditions are satisfied, then it will be coming under RCM. So renting of motor vehicle to a body corporate is taxable under RCM. Now, that body corporate, instead of taking the vehicle on rent, they take the vehicle for a trip. So, one particular trip, and they will pay some charges. On that charges, whether the body corporate should pay GST under RCM. So, this issue has been clarified by CBSE, stating that first we need to make a distinction between what is renting of motor vehicles and what is transportation of passenger service. Whenever a person takes the motor vehicle on rent, completely the possession is with that person for a particular time frame. Whereas, whenever they receive transportation of passenger service, usually per trip, they will be paying the charges. So, whenever they pay the charges based on kilometer or per head or per trip, that will be transportation of passenger service, and that is not covered under RCM, that will be FCM. So, supplier only is required to pay. Whereas, whenever the body corporate is taking the vehicle on rental basis based on time, daily, monthly, etc., then it will be coming under renting of motor vehicles. Then they need to pay GST under RCM if the rate of GST charged by the supplier is 5%. The next issue is with respect to hiring of vehicles by a person. So, usually corporates will be taking these buses for the purpose of transportation of their employees. Now, there is a contract carriage. So, a person is having a contract carriage, that is a bus, which is a non-AC contract carriage, given that is transportation of employees of a company in a non-AC contract carriage. Is this taxable? So, we have one point which says that contract carriage divided into two. AC always taxable, non-AC divide into two for tourism or hire. So, whenever you have a non-AC contract carriage given on hire, so that will be taxable even though it is a non-AC contract carriage. What if it is a AC? Anyhow, it will be taxable. If it is a non-AC contract carriage given on hire, it will be taxable. If it is for public transportation, then only it will be exempted. Okay. The next issue is with respect to private ferries used for transportation of people from one place in India to another place in India, say from India to Andaman. So, private ferries are used. Whether this transportation will be taxable or exempted. We have one exemption with respect to transportation of passengers by coastal waters between places in India. If it is predominantly for tourism purpose, it will be taxable. For public transportation, it is exempted. Now, public transportation should not be misunderstood that only when government is doing this transportation, it is exempted, not that. Let it be government or private. If they are transporting the passengers in coastal waters, so transportation of passengers, that is for public transport, not for tourism purpose. So, trips. So, that will be exempted. So, let it be a private ferry or let it be a government operated ferry. So, if they are doing transportation of people, so then it will be exempted. Suppose if it is used for tourism purposes, so like on a vacation, etc. and all, then it will become taxable.